Hey folks, welcome to Tuesday, the 28th of September 2021. What we've seen this morning is quite the push on downside in DAX, followed with its US counterparts on Nasdaq, SPOOS, and Dow. Um, no, well, yeah, we have seen further extension on the lows in the bonds and Bund and T notes in the sort of Asia Pac session. So really, oil as well, doing nothing but going up. Currently up about 1% on the session so far, and dollar now breaking out over what was a big old range it put in over last Wednesday's FOMC speech. So really, that's a good occurrence that we've been looking for, and not really wanting to get involved on any sort of dollar denominated FX trades until then. And gold, taking a bit of downside as well, actually, with the bonds. I suppose it's really this real yield rising story. I think downside in the DAX yesterday was blamed on, the rising of the real yield, whereas, people are not really so enamored with buying into the dips on the Nasdaq any further. And you saw on the open yesterday, Amazon was down about 2%, went down about 2.4% overall. Haven't checked on it since, but I don't think that it had a strong finish to the session. So, and the counterparts in tech also, took to the downside yesterday. Facebook, Netflix, and so on and so forth. So let's get over and have a look at these charts. And if I take my face off the screen, you can see the bonds in the bottom left of your screen here. T-notes, really, you're seeing that overnight activity sort of opens up quite lethargic, testing the pivot, and then, what was it, about 3 a.m. down we go. So we're down about zero point 0.3 of a percentage, and the real yield and the nominal yields will be rising on the back of this. Same activity seen in the bunds there. You see the DAX this morning on the daily chart as well. We can look at that. Testing into the 15,439, which was this sort of line in the sand high from the 3rd of March, April, May, and it has been a good line in the sand, but not a very tradable level. I mean, it was the low of day on several occasions leading up to, especially the 9th of September. But today, the test has not held up here. 100 EMA just above, so we're down 1% on the session in the DAX. Fine. We'll move on to the US session. I think, well, yeah, I mean, I'll talk about what I'm looking at and seeing here when I come to the US markets. And you can see here the NASDAQ similarly down 1.15%, finding some support in on the daily here. The real thing to look at is sort of we've had the bid up, and now we've pulled back to test under the 50. Really decent check last Monday, and then a pullback, and now we're seeing what is trying to be a continuation of the downtrends for me. The only, a lot of things with trading are really, coin flip in terms of it's either heading up or heading down. And I think for me, as we saw this pullback, really, if the market's going to have to find footing on the lows of today, if we're going to kind of, get on with making new all-time highs over the coming quarter, and indeed probably 6 months. I don't think it'll be that long. But right now, if we don't hold this defense line, 14,987s, and particularly last Monday's low, well then I think we're getting into what is a major kind of pullback in the grander scheme of things, and that is this sort of epic uptrend in equities. So yeah, I'll probably come in to test on this trend that's in effect effectively since the low of the 2nd of November 2020, and then retest and proven on the 8th of March 2021, retested again on the 19th of May 2021. So I think another test of that, you see a breach in the 100 EMA and down. These are big markets. I don't These moves are never linear. when you're looking at it on this sort of time scale of dailies, So, but just what we do try to do in the room is to make people aware of the sort of mapping out of the market, that OODA loop piece of the observe, orientation, decision and action, and we're taking care of the observation and orientation here. Yeah, support coming in 14,987. A little bit of excess on the lows in the last in this candle, closing in 15 minutes, and that's what you do want to see if you want to be looking forward the longs and to look to buy on support 14,987. You probably be using some other tools like VWAP to kind of keep you in that trade. But for me, what I'm seeing currently on US equities is that there is more downside in the post. So, SPOOs, if we have a look here on the daily, similar stuff really in terms of, is it pullback continuation? And what we saw from, the bid we saw last Monday up is just the pullback within a pullback, so this is the pullback, and we could go a lot lower. This is the major pullback. We're getting that pullback within the pullback. And then this is sort of continuation down, if you like. So, I think that's, neither here nor there. You got to be really moving with the market and trading what is happening, not what you think is happening. And so, very much we're just moving down. Quite a bit of selling momentum has come in this morning on these markets. 43.74 and a half. Actually, to come back to the daily to show you that level, that is sort of that double tap high, 14th of July this year. It was also a low of day on the 18th of August, and it flushed out, on the 19th, I think it was 1920 there, of August. So, I think coming down here, a retest again. Well, last week, it was completely obliterated and neither support nor resistance. So, if we do retest this, I don't really see a huge amount of buying to be coming in here. But really just going to move with the market and go with what it's telling us. How do we make money today, Tim? I hear you ask. Largely by sitting on our hands and waiting for this market to really shape up. I would love to see, if the 43.74 is going to hold, I'd love to see another sort of bout of selling, maybe push into the S3 43.59 and quarter, and just cannot sustain that selling down there, and then go for the longs either at the S3 or the 43.74s and kind of get back up, directionally back up towards the 50 EMA. But for now, the downside is in. I think it's always difficult trying to get on board with the short side when you have had that really good push in the morning time to the downside, and then you're kind of trying to get into that trade, and then the market just has other things in mind and wants to get back up to average pricing, and so it makes it really kind of hard to get on late stage shorts. For me, when you have these pushes in the market, I'd much rather wait for the US session to open, see what you can see, and kind of come in like 3:30 with a trade rather than trying to ace it on the open, and probably getting really chopped around. So that's SPOOs. And on the Dow, yeah, here in the Dow. So we have this sort of line in the sand we've been looking at in the Dow. It's the high of the 7th of June, and the low, I believe, is the high of the 1st of June. So that kind of gives us this line in the sand. It's served us quite well, actually, in the past couple of weeks and months, as you can see on this chart. So the top of this range is kind of holding up. We had this sort of breakout of the downtrends really started from the 9th of September, confirmation 13th of September. That gives us the downtrend. And so we had that sort of breakout here on Friday, pushed above, excess on the highs, came back down to find this support now this morning on the S1s. I'm actually still looking at pretty much 100 EMA test. I really like the 34 200s as a level here. So for now, I'm just going to really sit in my hands and wait to see if we can get that traded. I've been looking at that level for 2 weeks, I think now. Maybe, well, no, about a little over a week. So, but for now, it is supportive on the top of this range. That is 34,602s. 34,602s. You know, a lot of the big banks talking about the big 10% correction in the markets. You know, and that move is certainly not going to be linear. You know, we're not going to just like one day be down like, 10%. You know, they are talking about from the highs to the trough of a pullback. I mean, as I move this down, not 10% kind of puts us in around the 3200 level, down around here. So, I think a lot of those analysts are talking about SPOOs when they're talking about that. And so, if we go over to the SPOOs and have a look here, you can see on the daily chart, we'll just blow this up a bit for you. So that 10% correction is going to leave us somewhere down around, hold on, somewhere, yeah, down around in confluence with this 4117 and a half. And that is sort of the low of the 21st of June 2021. And I think, by the time the 200 EMA gets up here, I think there is going to be sort of a draw for the market to want to trade here, given that you're going to have the 200 EMA will be at a 10% drawdown from the top of the all-time high. And so, I just kind of think that the market is going to try and want to push that. We've had quad witching, and I just find it really hard to conceptualize how, loads of traders are going to be basically getting long, up around these all-time highs when they can easily just reposition limit orders, down around the 4117s, and even on the individual constituent companies, they can put limit orders on lower pullback areas, and then just buy some downside put protection in the meantime. And so, the put protection from the quad witching is very much paying out right now. Even if you're just trading your long puts on the SPOOs from anywhere here around the quad witching, which was pretty much around here on the all-time highs. You are getting paid out on that right now, and you're still net long in your accounts on your SPY or on your futures account. So yeah, I'm getting into a bit too much detail there, but how do we make money on the Dow? I think we've had a decent size push down. Well, we're only down 0.3 pre-market here. I think if we can hold this area, the longs will be able to get paid out back at pivot 34,775s. For now, I don't really know if we've put in the lows for the day on the Dow, and certainly holding below 34,650s, and pretty much holding below the 50 is bad news for this market. So really coming into the US session on the open, you probably want to see like a nice little push above, then a retest back to test this area, and it won't be able to sell down any further, and you'll get a snap back to the upside, proving that the pullback within the pullback has actually been a turn point for the market. Oil is really a hot topic this morning, and fantastic stuff. We've got quite a lot of mapping out on the market here done. But essentially, the big occurrence has been, you're looking at a weekly bar chart here on oil. The biggest occurrence has been the breakout of this mega downtrend. All right, this mega downtrend in oil, and on the weekly, that's really from the high of the 23rd of June 2014 to the high of the 1st of October 2018, and then that really came into confluence as an area the market could not get above in January 2020, and well, we all know what happened then. Of course, a big catalyst here was China cutting their demand forecast by 30% at the time, which really started, China did, well, depending on what side of the fence you're on, China did or did not do a lot of things that had global impact at that time, the least of them cutting their oil demand forecast. But hey, now we're above 75.74s. This is an absolutely massive level going back to the low of the week, the 16th of March 2015. It was pretty much the high, double high of the weeks of the 16th and the 22nd of January 2018. Market did get above temporarily through late 2018 before giving it up and coming back down to close out the year. And then a retest again, 22nd of April 2019, the week of, and another retest there, as I said, 6th of January, a week of the 16th of January 2020. And hey, now we're back here. The boys are back in town, 75.74, holding the bid in oil. We have some bets in the room for when we're going to get $80 WTI. Time wise, I never really liked time wise, but I've pinned my colors to the first week in November, and I think I might have to update that and bring it forward. As really, you can see here there is scant resistance between here and that sort of 79 spot 80s handle. So I think the next $4 in oil can come quite fast, and given that we have this sort of global scare about energy independence essentially between nations, like Russia cutting its exports to Europe on nat gas. Now nat gas is going crazy. It's up 7.5%, or when I looked at it on the European Open, it was up 7.5%. We'll have to have a look at it. Here is nat gas on the weekly bar chart. We'll probably go down to a daily, and this may cause a little bit of a delayed update on my charts. But yeah, when I looked at it on the European Open, we were up 7.5%. It's kind of come back to being, it's kind of come back about 1% from that this morning. Excuse me while I just get this to update. It shouldn't take more than a couple of seconds. And I think we can easily continue to get back up further in that gas, like $7.069. Just let this daily bar chart load here. The 7.069s. But there is this massive $6.50 target on the upside to hit. But you can see, we're up 6.25% at market right now. And just, it's all because Russia has cut their exports to Europe. So therefore, there is more demand for that US grade Henry Hub natural gas to be exported as LNG into Europe and consumed by the Europeans in replacement of what we've been getting from the Russians, or what the Russians have cut from their exports to us. Is this going to be temporary? We've had Minister Novak coming out, Russian Energy Minister Novak coming out already. I think it was either last Friday or yesterday. I'm pretty sure it was last Friday, talking about how Russia will remain committed to its exports and growing its exports to Europe over now and over the medium term. But saying one thing and doing another is exactly what the Russians love to do. And so, I think this can certainly remain for the next probably month, as then when we do come into winter, when the weather factors are kind of known or a little better known, then people start to reorganize their nat gas storage supplies. And they're pretty much set in until the springtime then, with what they've purchased. So I think while that happens, we can easily get back to $7.69, or $7 spot 069, I should say. The all-time highs are way up here, $33 per BTU. I don't see moves like this occurring into the $10 area at this time, but I'll certainly update you as and when we see changes in that market. So for oil, look, I think staying with the longs, I think a retest on the 75-74s will be supported. I am mindful though that because it's such a big level, there probably are going to be some momentum sort of stops to be triggered below here. So I'd let it flush out and then kind of get back on the longs once we sort of close, like say, an hour candle above here again. Gold, with that real yield rising, gold is therefore falling. And looking out on the gold daily bar chart here, you can see holding resistance under the 1752 spot 4s, and down we go. 1692s for the swing traders is the target on the downside. We did flush down there on the 9th of August. I think a retest will not be as rebought as you can see it here, but certainly target of interest 16,992 spot 8. To get into that trade and use something a bit sharper than this daily bars, we have this bear flag that we identified yesterday, and it was at this point in time. I think we were actually trading this candle at the time. I was like, that's quite interesting now that we've stopped sort of almost in the middle of the channel and now we're heading back down. And of course, we got that breakdown on the market and the sort of German participants pre-market coming in there 7 a.m. So I'd be looking for a retest on the trend and even maybe a retest on the 1751s to then get into that short, that swing low on gold. So that's it for me for today. Hope everyone has a good session. If you haven't subscribed to duggancapital.com and our Discord live trader chat room, please do visit the website and you'll have details there. Sign into the website and you'll have details on how to sign up. Okay, have a good day and I'll talk to you tomorrow. Cheers.